Hey guys, David here, and welcome to Digital Outlook. Guys, the next 24 hours could spell one of the biggest events in financial history. So, guys, let's get to it. So, guys, something that we have talked about at length on this channel is how regulation and regulatory clarity is going to be a big deal in moving these ecosystems and this digital asset space into the mainstream. Well, guys, right now, something is happening big time in Congress. And just take a look at this article right over here. And this, look at the title here. Pelosi may back industry-friendly House crypto bill. Now, just listen to this. The industry has become a major spender in political campaigns, and the most prestigious fundraiser among Democrats is taking notice. Guys, this space is becoming front and center. And what they're talking about is a bill known as the Financial Innovation and Technology for the 21st Century Act. Now, it was put together by Republicans on the House Financial Services Committee and represents the most comprehensive effort to regulate crypto to date, primarily along industry-friendly lines. Now, guys, what I want to talk about is right here that I've highlighted in blue. Now, just pay close attention to what this says. Fit 121 addresses the threshold question in crypto regulation. What counts as a commodity and is therefore regulated by the Light Touch Commodity Futures Trading Commission, the CFTC, and what counts as a security with oversight going to the more stringent Securities and Exchange Commission. Guys, this is massive. Just pay attention. The bill would define all digital assets on a decentralized blockchain as a commodity and would also give the CFTC regulatory authority over cash or spot markets for crypto. So what are we talking about there, guys? Mostly we're talking about exchanges in this space, aren't we? This definition means that most digital currencies and coins would get put under the CFTC's regulatory regime, and even for those crypto assets defined as securities, there would be several exceptions to SEC regulation. Stablecoins, which are pegged to the dollar and are used to facilitate crypto trading, would have only limited federal regulatory oversight. In other words, the bill delivers what the industry has sought for some time, a regulatory regime mostly dominated by the CFTC, which has been far more accommodating of the industry. The coalition letter says that the legislation would help accelerate the growth of blockchain technology and digital assets, fostering financial inclusion and protecting national security. What a 180 that you're seeing, and you got people like Nancy Pelosi backing it. Guys, I think they're standing up and they're paying attention to the voting populace. 60 million United States citizens are out there as digital asset holders. This is going to be a pivotal deal in this election, and you are seeing some massive legislation now. If this thing gets passed, and by the way, guys, the vote is tomorrow. It is going to have major impacts and literally could be one of the financial milestones for our economy as it even exists, just like the Howey test was all those many years ago, 80 years ago. Now, just listen to this right here. Waters and other Democrats held a member and staff briefing about Fit 21 on Monday, strongly rejecting the measure. Financial reform groups have been assailing it for months. This is a bill that, instead of creating regulatory standards for the crypto industry, tries to rewrite financial regulations to benefit crypto, says Mark Hay, senior policy analyst on fintech with Americans for financial reform. The bill delivers what the industry has sought for some time, a regulatory regime, that they're highlighting that part here, mostly dominated by the CFTC, which has been far more accommodating of the industry. And guys, it has a big shot at being approved. Now, in particular, advocates take issue with the Title II of the bill, which would alter the long-established Howey test for determining what counts as a security. Well, guys, the Howey test is from basically the 1940s. It is not even up to par for what would be deemed as a security in the digital asset space because, guys, we're holding on to assets like XRP. Of course, the SEC wants to see XRP deemed as a security, but holding on to XRP does not give us shares in Ripple as a company. And as such, they are not beholden to us as shareholders. There's no dividends that we get, nothing like that. And so we're not making an investment just based on the assets, on the efforts of others in a company like that. So it's nothing like a stock, which in fact is a security. What we're holding on to is a commodity, a digital asset commodity, just like the oranges were a commodity in the Howey test. It wasn't the oranges that became securities. Otherwise, every grocery store in the United States would have to have registered with the SEC to sell them. It was the contracts surrounding the orange grows that became the securities. And that is exactly what these are. These are digital commodities that anybody, and look, we got over 7,000 businesses using the XRP ledger and utilizing XRP. Guys, not just Ripple. So how can XRP in and of itself be a security? It cannot. And this is one of the conundrums that the SEC is finding themselves in. And guys, we need a bill, some regulatory clarity that is going to literally define what is and what is not a security in this space. And this bill is doing it. Now listen to this. The Howey test says that an investment of money in a common enterprise with a reasonable expectation of profits to be derived from the efforts of others is a security. But FIT 21 would change that standard. No, it wouldn't. What it would do is it would actually define and say, listen, these guys are holding a digital commodity. But a lot of these folks just can't wrap their head around that. That is what it is. It is not like a stock. It is not a security. And guys, speculation has driven this market any more than utility has, especially in the last few bull runs. That is for sure. Utility will, but utility could come from anywhere, not just one effort of other, but a community. And that's the whole point of decentralization. And that is what they cannot grasp. And this is where we need legislation that can grasp that. Now, but if FIT 21 could change that standard, which has been in place since the Securities Exchange Act of 1934 for digital assets, that would keep them out of the SEC oversight. Hayes says that this creates a roadmap for other Wall Street players to use the same rubric, meaning that other investment contracts could be written outside of crypto whose assets would be exempt from securities laws. Well, guys, these digital assets don't have any investment contracts associated with them. Who are we contracted with? Nobody, guys. We hold them individually. We're not contracted with anybody. That would be like saying, because I own an ounce of gold, Barrick Gold owes me some dividends for that, because of course Barrick Gold is out there and they're contributing to, the gold market all around the wide world, which very well could result in a difference in price, couldn't it? All these various companies, but that is not how it works. Gold is a commodity, and me just holding it does not mean that all these players out here are somehow beholden to me, or that I've got a securities contract because, hey, gold might go up in price because this company over here, has a short supply, or this one over here, and on and on and on. Not on your life. And that is exactly what these are. They do not. They depend on a decentralized network. Anybody could contribute to this space and cause the utility of it to just go absolutely nuts. And as a result, the price could increase. That is not an investment contract, guys. That is not. There are people who are making speculative plays holding on to commodities, aren't they, with gold and silver? They sure and heck are. Well, guys, why aren't gold and silver in and of themselves securities? Because they don't represent that. They represent commodities, and the same thing for these digital assets. But this is a major, major deal, and it's going to the House floor for a vote tomorrow. And you've got some big time Democrats standing up and paying attention to what the society, what the people are really out there looking for. And 60 plus million US citizens out there in this digital asset space. Guys, I think if I was running for office, I'd be paying big time attention. That's for sure. Now, guys, just check this article out. XRP bullish breakout targets $15 to $20, and analyst predicts 2,000% gains. Just listen to this. Analyst Javin Marks sees a strong RSI momentum in XRP, predicting a bullish breakout with target prices of $15 to $20 and potential returns of up to 2,000%. XRP is approaching a crucial moment as it nears a key convergence point, identified through recent technical analysis. Financial analyst Javin Marks highlighted this development in a recent X post, noting RSI pattern that suggests robust underlying momentum in XRP prices. Marks believes this pattern indicates a potential bullish breakout in the near future. Now, Marks analyst draws attention to the RSI pattern, a relative strength index, which has been forming a series of lower highs and higher lows. The descending trend line on the RSI suggests a decrease in momentum as the price consolidates within a symmetrical triangle pattern on the chart. Now, guys, we have been hearing that from tons of TA guys that are saying, look at what is going on in this chart. It is almost impossible not to be bullish. I've heard them say, looking at it just from a TA point of view. Now, historically, this type of pattern often precedes a significant price movement, either upward and downward. In this case, the RSI pattern supports the potential for an upward breakout. Should the bullish break occur, Marks post further projects a conservative, by the way, target price of $15 to $20 for XRP, contingent on the current market conditions. And this is literally what he says. A conservative target for a breakout and logarithmic follow through here could be 15 to 20 bucks, which could result in a 20 to 36x from here and more than a 2,000% run. This potential price surge represents a substantial increase, potentially yielding returns between 20 and 36 times the current value. Guys, it is a big deal. Now, I want you to pay attention to this over here because this article coincides with this one, which all have an impact on bullish breakouts. Now, just listen to this. The Ripple versus SEC analyst Bill Morgan exposes SEC flaws in the lawsuit. The SEC wants public access to Ripple's financial information to determine how much Ripple should pay if they lose the case. Well, guys, if this legislation gets passed, then I'll tell you what, this case is over and done, or at least definitely should be. Why? Because, guys, Ripple and XRP are a part of a decentralized ecosystem, and this regulatory clarity would take that right out of the hands of the SEC, and this would become moot. But guys, I'm telling you something. I literally believe that we are going to see the coinciding of these events, and we could be getting a decision in this case. And wouldn't it be some kind of wild if we got a decision right around the same time that this whole deal starts to get implemented, and it is on like Donkey Kong. I mean, when you see this case settle through, it is amazing. Now listen to Bill Morgan's analysis here. In the seemingly endless battle between the SEC and Ripple, the crypto world holds its breath. A recent twist throws a wrench into the case. The SEC fights to expose evidence Ripple desperately wants to keep hidden. Well, really, guys, why they want to keep it private, which I guess they could use the word hidden, is that they are not wanting to go against the non-disclosure agreements that their on-demand liquidity partners, well, actually not on-demand liquidity institutional buyers from way back had bought. And this is the deal. Now, legal expert Bill Morgan didn't mince words in criticizing the SEC's latest move. Taking to social media, he not only slammed the SEC's stance, but also pinpointed glaring inconsistencies in their arguments, especially regarding Ripple's on-demand liquidity contracts. According to Morgan, the SEC's claim that none of the discounted sales to institutions were ODL contracts was a significant misstep because, guys, none of them were. That's why I believe ODL as an on-demand liquidity is going to get a final decision that it is not going to be banned in the United States like you get a lot of these FUDs saying. Now, he clarified that ODL contracts require customers to buy XRP at prevailing market rates, using it in transactions instead of just holding it as an investment, and that's right in the contract. This difference strikes at the core of the SEC's argument that Ripple's institutional contracts should be seen as investments. Now, the SEC's rebuttal to Ripple's motion focusing on the principles of public interest and transparency, stressing the historical importance of public access to judicial documents, the SEC cited legal precedents to support its stance. Well, guys, are you kidding me? How many people have made FOIA requests to get information out of the SEC and they have refused? It is absolute hypocrisy. Now, the common law right of public access to judicial documents is firmly rooted in our nation's history unless it's documents that we, the SEC, don't want to give up. I'll tell you what. Now, the SEC argued that the financial information Ripple seeks to redact is essential to the court's determination of appropriate remedies. This includes data on Ripple's current assets, sales, revenues, expenses, and investor discounts. Ripple's defense, however, faced skepticism from the SEC. The agency dismissed Ripple's argument as mere speculation, lacking substantial evidence. What a load of poppycock. The SEC knows exactly the information in there. Why, guys? Number one, they've seen it, obviously. But number two, Ripple was coming in for 8 years and talking with the SEC before this case was dropped on them, and on the last day that Jay Clayton was at the commissioner of the SEC. Guys, they have been transparent throughout, and so the SEC knows this could damage Ripple, and they're holding it out there. Guys, this is all a ploy. That is exactly what it is. Now, Morgan highlighted how the SEC admitted none of the discounted sales to institutions involved in ODL contracts. This distinction is important because it fits exactly with the SEC's admission that ODL contracts do not have the features that made other institutional buyer contracts investment contracts, as summarized by Judge Torres in the summary judgment. The ODL contracts require ODL customers to purchase XRP at market prices and to use the XRP in ODL transactions and agree not to hold them as investments. That is a fact, Jack. And he says, hey, it remains a mystery why Judge Torres lumped them in with the other contracts with the institutions. But guys, here's the prediction of the outcome. Will the SEC prevail or will Ripple see a win? Guys, I think Ripple's going to see a big time win. And guys, it would not surprise me if it absolutely happens right around the same time that we see something big time happen in Congress with regulatory clarity for this space. Guys, we are getting closer and closer and closer. And when they fire that starting pistol, bam, we are going to be off to the races. And I'll tell you what, I want to see you right there, standing right beside me in that winner circle when we cross that finish line. So guys, as we all can see, things are moving in this space way faster than what most of us even expected. But one thing that I can tell you from personal experience is you are going to thank yourself that you took the time to get your plan in place. And what our coaching program offers, that is where you and I get to meet one-on-one for 1 hour over Zoom. And during that time, I share with you our personal journey in that last bull run and what enabled Judy and I to experience some amazing financial success. I share with you the mistakes we made so that you don't have to fall into the same pitfalls we did. We take a look at your portfolio and make sure that it's balanced towards your goals, and we work together to develop your exit strategy. We can even get your assets off an exchange and onto a hardware wallet, along with delivering to you some amazing techniques that are really going to help you in this space. Now, the cost of that is $250, and if that's something that interests you, you write me right there at coaching@thedigitaloutlook.com, and we'll get y'all booked in. So guys, I truly hope that you enjoyed today's video, and as always, it's not financial advice, it's just my 2 cents. Hit the like and subscribe, drop your comments right down there in the comment section, and I'll catch you in the next one.